Favorite days to trade in the market. You know, it's funny. When I used to not trade, when I was working my 9 to 5, I used to dread when the weekends would end. I used to hate it. I used to hate Mondays. Now, as you know, a essentially a full time trader because I no longer do the 9 to 5 thing. I hate when it becomes the weekend. I hate Saturday and Sunday. I can't wait till Monday comes around and I can start to trade. Now, there is some truth in that the market has cycles of, really good times of the month to trade, really good days that are more active to trade. And for me, what I have found is Monday tends to be one of the most active days to trade because you got to think about it. Everybody on the weekend has just been reading all the news that's been going on in the economy, waiting for earnings to come out. So they're excited to just get into the market on Monday. Everybody's normally super, super pumped up to start making money, right? So Mondays is a very active day. Then it kind of tapers down a little bit, like Tuesday. I mean, sometimes we'll have a follow through play, but I normally see Tuesdays kind of being what I call a consolidation phase where even if we look at some of these are broken up into days and I'm looking at specific months. So like if I come over here and let's just focus on May through July, right? And we focus on some of these days. When we look at these Tuesday activities, you can see they're pretty flat. Here's another, let's go to another Monday, Tuesday. Tuesdays are pretty flat for the most part. Again, unless you get a little bit of that follow through. In conjunction, everything adds up though, right? So that's always important to understand is not one day is not going to make or break the market. It could, but we're looking at the overall activity over the course of time, right? And so that's why it's always important to always look back at the month and the overall trend for the year and so on and so forth. So Tuesday is kind of a lull. Wednesday, it kind of is like that second wind. Wednesday tends to be that second wind pickup where you get a little bump. A lot of times we'll have a lot of big economic news on Wednesdays. So Wednesdays is a really important day. Thursday, same thing, kind of tapers down a little bit. And then Friday, to me, the two most active days is going to be Monday, and then you have Friday. Now, the great thing about Friday, we are looking at that S&P 500. Now, majority of my clients trade options and futures. It's like a 50-50 almost in comparison to the students that I have that are trading. So it's half and half. Now, regardless of whether you're trading options or you're trading futures, those are made up of individual tickers. If you're trading the Nasdaq, that's made up of individual tickers. If you're trading the S&P 500, it's made up of individual tickers. And those individual tickers, the conjunction of their movement is what makes up the movement for the S&P. So the big hitters are your Apple, your Amazon, your Nvidias, your Teslas, your Googles, so on and so forth, right? Now, with those top five, when you start to see individual companies moving and making the same move in the same direction, you'll start to see that S&P or that Nasdaq also get a nice little surge. So that I call that confluence, right? I'm looking at the confluence of what the market is doing. However, when you're trading options, one of the things is there's two things when it comes to risk: time and type. Now, time is the duration for your expiration, right? So when people trade the S&P 500, they could do what is called 0 DTE, where every single day those contracts are going to expire. That makes those contracts very volatile, very risky. And with high risk comes high reward. But with high risk, you could also blow your account if you don't know what the fuck you're doing. Now, individual tickers, though, they don't have expirations every day. Tesla they're called weeklies. They're only going to expire every Friday. But that's what makes Friday so beautiful in terms of the volatility is when Friday comes around, you could be trading 0 DTEs for everything. You could have 0 DTE trades for the S&P 500 going. You could have 0 DTE for Tesla that day, for Amazon that day, for Apple that day, for Google that day, for Nvidia that day, so on and so forth. So on Fridays, all those contracts are expiring, those weeklies or those 0 DTEs, and that's what drives a lot of volatility on Fridays. So my two favorite days are Mondays and Fridays, and on occasion I'll see like a Wednesday playing out. And again, on a one-offs, you'll see those Tuesdays or Thursdays for follow through. But what day do you like to trade? What is your favorite day to trade in the market? I would encourage you as a bonus to also look at your metrics. It's something that I used to do a lot in the past. I mean, I still do. I have taken every single trade that I've ever taken. I've always documented the results for it. But one of the nice little graphs that I get from there is what day do I perform the best? Which day do I have the best win rate? Or which day do I have the most losses? And I want to try to develop a plan where, like, let's say Thursday, I always fucking lose. Guess what my plan should be? Stop trading fucking Thursday, right? So it's really important to have these metrics and also find out what days you like during the week, also what months you like. All that comes into your trading plan. So let me know what you guys thought. Type it in the comments and I'll keep these videos going for you.